right. Good evening, everyone. And welcome to Student Loan Strategies, How to Manage Your Loans, an educational webinar presented by the Xi Omega chapter of Alpha Kappa Alpha Sorority Incorporated. I am Jare J. Stevens, a member of Xi Omega, and your host for this evening. I hope the music gave you a little bit of energy as we get ready for this fun program. We're going to have a good time together, so let's get right to it with some stats so you can get the context of the importance of this topic. Did you know that 45.3 billion Americans are burdened by student loans? According to a March 2023 report by Forbes, students graduate with an average of $37,720 in student loan debt. And in June 2023, the total federal student loan debt balance was just over 1.63 trillion with a TR dollars, which is triple the amount it was in 2007. Last but not least, women have more debt than men, and Black borrowers have more debt than other races. So needless to say, student loan planning and student loan repayment is an essential topic, and it is why we are here today for this 1-hour webinar. Before we get started, I would like to share a few housekeeping reminders. All audience members are automatically muted, and this webinar is being recorded. If you have questions or experience technical difficulties, please use the Q&A function to request assistance. And of course, you can actually use the Q&A function to ask questions of our panelists. We are happy you are here, and we are here to serve you. So let's get started by introducing our moderator for this evening, Danielle Barrett. Danielle is a graduate of Florida A&M University School of Business and Industry, where she earned a Bachelor's of Science in Management and an MBA. Okay, Rattlers. She also obtained her Juris Doctorate degree from American University's Washington College of Law, and she currently works as a Senior Ethics Program Advisor for the federal government and is a participant in the Public Service Loan Forgiveness Program. Welcome, Danielle Barrett.
Thank you, Jare. Thank you for the introduction. It is my pleasure to serve as the moderator for this evening's discussion. To get started, let's introduce our panelists. First, we have Briana Franklin. She's the co-founder and CEO of Prosperity Project. Briana, otherwise known as Bree, is a businesswoman, philanthropist, student debt expert, and a thought leader with a passion for the socioeconomic and holistic empowerment of Black girls and women. Having taken on a financial burden that eventually ballooned to nearly $120,000 in student loan debt through her undergraduate studies at Dartmouth College, Bree developed an acute appreciation for the challenges many student debt holders experience, including diminished ability to establish financial independence, taking advantage of personal freedoms such as starting a family or buying a home, or even launching business ventures. In recognizing the extent to which other Black women in particular experience adversity at the hands of the $2 trillion student loan debt crisis, as well as the lack of financial literacy, she formed the Prosperity Project as a solution for eradicating these systemic barriers. Her work has been profiled in outlets such as Forbes, BuzzFeed, Authority Magazine, and Thrive Global, attracting support from audiences worldwide by way of Prosperity Project, generating nearly $400,000 in revenue. Next, we have Sim Terwilliger, a student loan planner, an organization that advises people with $20,000 to $1 million in student loan debt to find the optimal payment plan that reduces their payments. Sim is a student loan consultant at Student Loan Planner. She holds the CFP and CSLP designations. She joined the Student Loan Planner team after 5 years of fee-only planning, including 3+ years with Fox Company Wealth Management, specializing in physicians and their families. Sim is a University of Pennsylvania alumna, where she met her husband in 2010. She lives in Hampton Roads and enjoys hiking, food adventures, and spending time with loved ones. Her passion is to empower others, both financially and personally, by having authentic conversations. Her goal is to make sure that student loans don't hold any of their clients back from achieving financial independence or from living their values. Now that we've properly introduced our panelists, it's time to get the panel discussion started. While we do have questions that we do have pre-prepared questions, The audience is also welcome to drop their questions in the chat. So, welcome, ladies. And let's just get started with the basics to make sure we all have a fundamental understanding of student loan debt. Sim, student loans have existed for decades. Why are they such a burden for borrowers nowadays?
Yeah, that's a great question. And I would almost argue that in a lot of ways it's always been burdensome, but especially so now. There's lots of different types of consumer that someone can have. Student loans are the only ones you cannot discharge through bankruptcy. So you have almost like these education handcuffs, right? That people are stuck with them one way or the other. Minimum wage is stagnant. It has not changed. It has not changed at least for the last decade, probably longer. And we all know, I think, that minimum wage is also not a living wage. And what constitutes a living wage is increasing all the time, right? Some people say it's 15 an hour, depending on where you live. If you're in California, it might be even 25 an hour. However, college costs don't care about that. And college costs have been rapidly outpacing inflation. So if maybe last year aside, if inflation has been 3%, college costs have been increasing 5+% with no cap in sight. And let's not even forget interest rates. Interest rates on student loans themselves are abysmal and going up. And there's a push. Some people are talking about, well, what if we could change the interest rate to 0 just so that more payments could go to principal? So you have some people almost in this rat race where they're trying their best just to tackle their debt, and they can't even touch the interest that's accruing on it. And the other thing is, and we may have looked at the same Forbes article, but another stat from that article is that 5 million borrowers are in default, and that dollar value of their defaulted student loans is $112 million. So this is just a ballooning problem, and we don't really see an end in sight with it.
Oh, wow. Oh, that's a large number. Bree, the Prosperity Project focuses on helping Black women with student loan debt. What are some of the exacerbating factors that make it difficult or make it more difficult for Black women to get out of student loan debt?
Yeah, so I think Sim had a great preface to this, because as bad as the issues are across the board, as we know, Black women tend to face the brunt of every terrible thing 10 times worse. So in our case, we're dealing with everything that was just laid out, outsized tuition growth rates, but also stagnating wage rates, and the fact that Black women have traditionally already been overlooked for higher paying opportunities, right? We're no stranger to the promotion conversations and trying to get our way into leadership management and things that come with real perks like equity and stock options and more diversified compensation portfolios, right? We're overrepresented in the blue and pink collar, entry-level workforce, and just the job market that's more labor intensive. So that's not as lucrative. And on top of that, as a culture, we are working with a delayed start because our families have not had generations to, cultivate wealth at the same level. So it's like every new generation, we're starting over. We are having to be the ones to break through and have something to pass down to our children that's not debt. And so it just creates this vicious cycle. And especially what exacerbates it for us, we see all the headlines that are showing these glimmering images of Black women with, all their different degrees, and they work their way through a PhD to a terminal degree, and it's almost like each one is just its own standalone badge of honor, which of course should be commended. But what people are not talking about is the $500,000 and sometimes more that Black women are accruing in that process. And because of everything else, it's not that that degree will instantly translate into higher earnings. And so it's like they have the debt no matter what, but the paycheck is still up in the air. And so it creates this very vicious conundrum. And then we started over, because for those who do, go on to have kids, which some don't even get to because they're like, I'm already stretched, I'm maxed out, there's no way I could provide for a child. Some who still go on to have kids, it's like they're dealing with that on top of parenting. So it's not even a question of if they can afford to send their kid to school on a full ride. So for us, it's just like with everything, it's especially taxing and so much more intensified and making it harder for us to escape that catch-22.
Completely understand. Sim. Now, we've talked about, or you've mentioned, the student loan debt and default borrowers, but how do student loans impact borrowers? How are student loans different from, let's say, credit card debt or car notes, mortgages, things like that? Like, can you talk to that?
Yeah, so part one would be, like I kind of mentioned, you can't discharge them in bankruptcy. There are a handful of cases where you could maybe discharge private student debt, but federal is a no-go. And because of people's student debt burdens, they put off certain decisions, right? The decision to maybe buy a house or to have children, or if you're lucky, even to be able to not have difficulty having children. A lot of people have to do IVF or assisted reproductive technology, which is very expensive. How do you do that when you're carrying 6 figures of student loan debt? You know, with buying a house, for example, talk about the mortgage thing. When you're shopping for a mortgage, the lender is going to look at your debt to income ratio, but how they look at your debt to income ratio as it pertains to your student loans is different. So a lot of student loan borrowers are doing what's called income driven repayment. So that's an option where they can calculate your student loan payment based off of your income, assuming they do it correctly, because there's a lot of mistakes right now. Be
That's
vigilant.
true.
But, and some of you may have experienced this personally, we'll talk about some options for that later. But back to the mortgage thing. So there are 5 main mortgage entities that do lending. And the way that they look at your student loan payment is not the same. So for example, the Federal Housing Administration, that's where a lot of us have borrowed for our mortgages. They do not care about income driven repayment. They assume that you are doing what's called standard 10, which is basically like 1% of your student loan balance, which for many people, especially if you have like a professional or graduate degree, could be like $3 or $4 grand a month. And so they are not going to give you a very good interest rate. It could be very expensive to borrow through that entity. There are other entities like Fannie Mae or Freddie Mac that will look at your actual student loan payment. Unless it's 0, then you go with Fannie Mae. But that's sort of the idea, is that you kind of have to know that these options exist, and it's not intuitive. It's not just like someone sat down and said, this is how you get your mortgage and go through this lender, and how do you even find the right lender? But yeah, a lot of people are putting off decisions, the decision to get married. Some people put that off because they're like, well, I don't want my situation to impact my spouse or my spouse's situation to impact me. Sometimes it's actually helpful to get married when you have 2 people have student loans, because sometimes the math works out right. But again, it's one big math question. And sometimes you don't know what you don't know.
That is very much true. You do not know what you don't know. So segueing to the next question for Bree, what's the difference between student loan forgiveness and public service loan forgiveness? Like, what are the differences in those two, and how does someone know if they're possibly eligible for either?
So I think this is more up Tim's alley, or I think when we were trying to figure out like the order, I think Sim, would be more able to speak. So I can just give like a general overview, and
Okay.
then Sim, if you want to like kind of fill in. But as far as I know, so I can speak mostly to the private side, whereas there is, like she said, absolutely, it's a lot more rigid and inflexible in terms of what your options are. Under forgiveness, like it's, privately held, so it's a business, and the companies are able to take a lot more liberty, which they have been known to do, to take interest and make it variable, so it's not as easy to keep a gauge on. But yeah, if I could turn it over to Sim to, fill in the blanks a little bit more concisely.
Yeah, everything that Bree said is totally spot on. So a lot of people think when you have student loan debt, your only option is to pay it off, and you kind of just throw whatever you can at it. But you can actually go for forgiveness if they're federal student loans. And there's 2 paths to forgiveness. And so one is public service loan forgiveness. So the deal is, for better or worse, the government was trying to incentivize people into taking lower paying jobs in the interest of public service, but you have to be in public service for 10 years. And there's some requirements that go along with it, including you have to be on an income driven plan, you have to have direct loans, blah, blah, blah. But the deal is, you do the service, you do it for 10 years, you get to the end, and whatever balance you have left is forgiven tax free. Then you have income driven repayment. So these are the payment plans themselves, and you can get forgiveness on the payment plans themselves. There are 4 income driven plans. The trade-off is it's not 10 years, it's 20 or 25, depending on which plan you're eligible for. And the way it is right now, the forgiveness at the end is taxable. So basically, if you get like $300,000 wiped out, the IRS is going to treat it as if you just happen to get like $300,000 bonus at work that year, and they tax you accordingly. We call that the tax bomb because we hate it. Now, there's some speculation as to whether or not, you know, that will exist or they'll get rid of it. They did get rid of it during COVID. So anyone who's getting IDR forgiveness through the end of 2025 is getting that tax-free.
Okay, so IDR forgiveness through the end of this year is tax-free. Is that the same for PSLF?
PSLF is always tax-free. I guess they theoretically could change it, but it's always been tax-free.
Okay, how do you know if you qualify for, like, let's say PSLF or, well, IDR is based on how long you're paying and the length of time, but how do you know if you qualify for PSLF or going through that program?
So there's 4 requirements for PSLF. Well, more or less it's 4. At the core, think 4. So one is you have to have all direct loans. So some people have these older like FFEL loans, Perkins loans, those don't count. And we have a special opportunity to get them to count through the end of this year. It's called the IDR account adjustment, which we can talk about. First requirement, direct loans. Second requirement, you have to have an income-driven plan, and there's 4 to choose from. Third requirement is that you have to work full-time for a qualifying employer. So full-time is defined, now they changed it, now it's just 30. It used to be different, now it's just 30 is full-time. Qualifying employers, any 501c3 non-for-profit or government entity. There was recently some changes in the rules. So now if you like work for one of those hospitals in like California or Texas, and they didn't let you work directly for them, like Kaiser employees, those physicians were not allowed to be employed directly by Kaiser. So they were left out of PSLF, which was a big injustice. And so they just fixed it and they made it retroactive. So a lot of Kaiser physicians are like eligible now. Fourth requirement is you need 120 qualifying payments. And so I'll just quickly touch on that IDR waiver. This is a brief one-time opportunity to get your loans to count for these programs. So typically, if you did a consolidation, which is different from the refi that Bree was talking about, consolidation is within the federal system. You take the loans, you smush them together. Traditionally, when you did that, that was a big bad, because if you had any payment counts towards anything, it'd start over. Your whole clock was done. It'd mess it up. Now it's advantageous because let's say you have like different payment counts going for PSLF. Maybe you have more on your undergrad loans. Maybe you have like 5 years there and you have like 2 on your grad loans, right? You do the consolidation, they're going to give you 5 years on everything. If you have the wrong loan type, if you have those Perkins loans, those FFEL loans, consolidate them. Now they're direct loans. Now they count. That's a big deal. And then the last thing that they're doing is forbearance, right? A lot of people ended up in forbearance because, you know, things happen and you're like, I can't make my payment. So what do? You call your servicer, you're trying to do the right thing. And instead of them telling you, hey, do income driven repayment, because you'll probably get a $0 payment, right? Maybe you lost your job, you don't have income. They didn't tell people to do that. They put them in forbearance. Forbearance doesn't count for anything. All it does is keep you out of default. And that was a big problem. And you have a lot of people who have these like really long periods of forbearance. And so now they're going to give you some periods of forbearance to count as a payment towards these like long timelines to forgiveness. And the last thing actually is for those of you going for PSLF, you might have heard those horror stories, right? I made it to the 10 years. I didn't get my loans forgiven. A lot of that it was really the servicers giving people bad info, right? People thought they were doing the right thing. They may not have been on income driven plans. Some people did, you know, something called graduated or extended, these like other repayment plans. Those don't count for PSLF. Well, with this special waiver that we have right now, they will let you count that time towards PSLF. So all of this is going to go away at the end of December. So if you're not sure, you know, if that counts for you, take a look at your loan history, see what you have, and don't write yourself off. A lot of people don't know that there's some opportunities out there. There's like millions of dollars that could be forgiven that people don't know about that they qualify for.
And if they're going to look for their loan history, they should probably go to studentaid.gov.
That's right. So studentaid.gov, that's like the official record keeper. Obviously you have your servicer, whoever's like holding your loans, but studentaid.gov is like your official record with the Department of Education, and you can get your student loan data file from there, and that has everything.
One thing I do want to, I have to chime in because I feel like it could be setting people up for failure if they don't know this. I just learned this 48 hours ago at a conference I went to here in the DMV, and a presenter, a former law student, now a practicing lawyer who's a Black woman, she spoke on this, and she said that she went the PSLF route and she did, you know, public service for the full 10 years, got her loans cleared. However, she wasn't fully out of the woods when she thought she would be, because they decided to arbitrate and say that because her payments were off by 1 penny, they were not going to count them. So they basically revoked the clearance, and then she had to petition to get them to do the right thing. And I want to point out, this was under a different presidential administration. And so the rules of 2023 under Biden-Harris, if we have different leadership in the White House, next year, it's not a theoretical, it will look different. It'll be different rules, and they're always getting covertly changed behind the scenes. So I just want to caution people. Of course, you want to make a plan and have the facts, but also know that the facts are fast changing, unfortunately, and it is largely outside of most people's control. Everyone's trying to do what they can, but unfortunately, there's just a lot of bad actors, misinformation, and misalignment that creates additional headache for people. So just wanted to share that story.
Yes, the program itself was created by George W. Bush. And so through the administration changes, how it's actually implemented has been, well, it's only been able to be implemented since 2017, since that was 10 years from 2007. And in that time, we've had 2 different administrations, and both administrations have treated PSLF differently. So that is a good note to take. Depending on the administration, how the program goes can be of a benefit to you, but take advantage of what is in front of you right now by getting your accounts up. I do have a question about counts. Where can someone find assistance if all of their public service, where can they find assistance if their counts aren't being recognized right now? What should they do or who should they contact to get their, maybe if it's SIM, this is for SIM, if it's taking a bit for their counts to update or something like that, is there someone they should contact? Is there any recommendations that you might have on that?
Yeah, so I kind of call it like the order of operations, right? So first is give them 3 or 4 months. They're so backed up. They did not get funding to hire more people and do this right. And they're making a lot of mistakes, like not just with PSLF folks, just anybody entering repayment. We're seeing a lot of mistakes. First thing I would do, if you're going for PSLF, your servicer is Mohela. So if it's been 4 months, call Mohela. Now, I'll probably always tell people just resubmit your forms anyway, just to get them in. Call Mohela and always ask for the, whoever the representative is, ask for their employee ID and document everything. I'm not an attorney, but I'm all about documentation. Who did you talk to? What was the conversation? There's some bad actors there too. And I feel like it kind of gets whoever you're talking to kind of play ball with you a little bit because they know, oh, this person's like serious, right? Unfortunately, also not unfortunately, but always remember you're talking to a person. And sometimes, they don't understand, right? They're new, they're underpaid, they're doing their best sometimes, right? Then you might speak to a manager, and that's probably not going to solve it, but you're following the chain of command, right? Then you would reach out to the student loan ombudsman, and you can do a reconsideration request. That's very hit or miss, but I would try that. My favorite place, though, to file a complaint is with the Consumer Financial Protection Bureau. I've done it personally for my husband's student loans. The way it works with them, whatever the entity is, whether it's about your student loans or something else, the entity that you are complaining about has 60 days to respond. And usually that does it. The Consumer Financial Protection Bureau doesn't play. So usually that fixes it. Now, also depending on where you live, you may have a congressperson, right? Maybe they sit on like an education committee or something, and they actually like care about this issue. Contact them too. And I've done that as well. And I found that to be helpful. So there's lots of different ways to get it done. But the first thing I would tell someone is if it hasn't been 4 months, 3 or 4 months yet, hang tight a little bit. And don't worry if they're not doing it by the deadline, right? So everyone's like, well, December is like, when all this special stuff expires. As long as you submit everything before December, they have to honor it. So that's where the documentation comes in. If you sent them, any paperwork, right? Certified mail, you have records. I got this in by the deadline. So they have to fix it, and they will.
Okay, so I know before we mentioned possible like zeroing out interest rates, do we know if there are any congressional conversations or legislation that's actually up for discussion on zeroing out the interest rates or giving full forgiveness or any of that? Do we have any say on that? Do we have any news on that? Have you all seen anything?
I would say informally, they're kind of being low key about it. So we have an IDR plan called SAVE, which used to be the repay plan. So the way the SAVE plan works is it's an income driven plan. And so if you have, your income is low enough that maybe you have even like a $0 payment or it's just super low, well, that's not going to cover interest. On the SAVE plan, anything that your payment doesn't cover, they wipe out. So there's no interest accrual on the SAVE plan. And so I feel like this was the administration's way of trying to very quietly try to manage the interest problem, because my personal interpretation is that if they try to do it in a way that's like straightforward and helpful, and you don't have to go on the SAVE plan to do it, I think that that's going to be fought. And I think it might not be successful. We already saw one attempt at, it was a different loan cancellation thing that the Supreme Court, decided to be partisan about, and it didn't go through. So we feel like that might happen with the interest as well.
Okay, I just have two more questions on this before we kind of move on. But one is, where can we find information on the waiver and consolidating and getting credit after consolidate, like specifically the PSLF waiver and getting the credits after you consolidated, or your payment counted after consolidation and stuff like that?
Yeah,
Where can they find that information?
So 2 places. One is studentaid.gov is where you will do the consolidation. And when you do the consolidation, you choose a payment plan. So if you're going for PSLF, you'll get on an income driven plan. And it takes about anywhere from 30 to 60 days for the consolidation to be done. And then if you're going for PSLF, your loans will be moved to Mohela if they're not there already. On Mohela's portal, I'm going by memory here, but at the top, there's like a thing that says PSLF. It's a drop down. So you'll go through the drop down and there'll be something that says status tracker. And I show everybody that when I meet with them. Look at the status tracker. Anything that says qualified next to that month means they've counted it, and you have that under your belt for PSLF. And if it doesn't say qualified, if it says like employment not certified, either they rejected your form or they haven't done it yet. But I tell people, submit your forms every 12 months. And that way, kind of in the back of your mind, like, hey, last time I did this, I was at 10 months. Now I'm going to be at 22. And the next time I do it, I'll be at, it's 22, whatever 22 plus 12 is 34, on a rolling basis, right? That's the best practice. So studentaid.gov and Mohela. Okay.
And for this, for either of you, but for folks that are caught in the industries that have been on strike this year, auto, healthcare, entertainment, and obviously this has affected their payment schedule, is there a way to note that? Is there a way for borrowers to note that with their federal student loans through income-based repayment or forbearance? It seems they can only make adjustments in the W-2s. What are federal student loans? It seems like only adjustments in W-2s are what federal student loans are looking at. So I guess the question is, how can they reflect their current status with their industries being on strike? With what's the best method? Like income-based repayment, can they adjust their payments, or would forbearance be the answer? Do we have any
Whenever
Mm-hmm.
it's possible to avoid forbearance, I would, because normally it doesn't count for anything. So the deal with income driven repayment is that you're required every year to update your income. There is nothing that stops you from doing it more frequently than that. And I always tell people, if it's going to help you, then you will recertify. So when you recertify your income, they're going to ask for income information. What if you don't have any income right now? Well, there's a button you can toggle. Right? Do you have taxable income? No, I don't. Or if your income has dropped, right? Some people have, maybe lost jobs, or they went part-time, maybe they had a kid or something, went on sabbatical. You can submit a pay stub. So the question is, has your income decreased since you filed your taxes? And you can say yes. And then what we call that's alternative documentation of income. So tax return is the default. You can use an alternative. The one thing to watch out for, though, this might seem like a small difference, but it's not. On the tax return, they're looking at line 11 on the 1040. That's your adjusted gross income. The adjusted gross income is when they take your gross income and they subtract from that your pre-tax stuff, 401k, health insurance premiums, all of that. You want them to use adjusted gross income. That's usually a smaller number than gross income. When you're doing alternative documentation of income, you give them their pay stub, you got to spoon feed them information, because some of them are lazy and they're not going to go to the column that says pre-tax deductions. And so they're going to calculate a payment off of your gross income. We don't want that. So you might have to go back to them and be like, here are my pre-tax deductions calculated off of my AGI. So you can so that's the trick for a lot of these people, is you say, I have no taxable income, or if it's decreased, they'll give them a pay stub.
Okay, thank you. So now, in moving on, Bree, can you tell us a little bit more about the Prosperity Project and how it works and what solutions you all provide?
Yes, so piggybacking off of this, having lived those very excruciating pain points myself and becoming what we refer to as being debt constrained, just to put it in plain terms and not hold back. I was very irate, coming into the working world and just being so far behind and put in a position where a lot of conversations, people are usually having where to live, what city, what job to take. It was all kind of spoken for me because all of my money, what little I was earning, had Sally Mae's name on it. And so we've devised an end-to-end solution spectrum for both stamping out predatory lending preventatively, but also helping rehabilitate those on the back end who have been harmed by it. And then also tertiarily changing the systems that allow it to even happen. So we started out with our flagship program, the 35 to Free initiative, which is named from the 35 estimated $1 billion in student debt that Black women carry, and then also a 35% rate of financial literacy that Black women are impacted by. And that program is a matter of combining debt relief payments where we directly, have deployed capital to help debt constrained Black women overcome that hurdle and free up some of their revenue, but also training them on finance and marrying the two so that it's a means to an end for generating wealth and not just saying, okay, your only goal is to get out of debt, because once you break even, then what? So we're repositioning that as like the first step toward that longer journey. And then also we've expanded on that to get in front of those who have yet to go through it and that we hope will not have to go through it. So I do a lot of speaking to high schoolers, to college students, to just really help sharpen their minds on the issue and know what to look out for, and basically just be the resource I wish I had when I was between 16, 17 in high school to in my early 20s, once I had taken on the loans, to just know that there is hope and that as long as I'm strategic and intentional, that I can come out on the other side. But then also we have a speaking pillar where companies will commission us to lead workshops and demonstrations for their staff members who are dealing with their own debt hurdles. And so I facilitate those sessions, which are called Prosperity Through Clarity. And that's really where we get hands-on and we share stories about those who unfortunately have lost their lives due to this very issue. So many people on here probably thought the worst it could get is just, I'll never be able to buy a house or have a positive net worth or get into the stock market. And those are all horrible outcomes, but this literally is taking lives. So there's two individuals in particular that our work is dedicated to the memory of: Jessica Madison, who is a woman, and she came out of a for-profit institution with about 25K in student loans. And that may not sound like a lot, but as we all know, it's all situational. And if you're only earning $10 an hour, that's still a lot to keep up with. And long story short, she was ensnared in this work to live scenario, and she didn't have time to take off from work and go check up on her health, go get physicals, and ultimately missed screenings for the cancer that would take her life. And then on the other hand, you have Alexander Ettinger, who is a 20-year-old. During the pandemic, he got his hands on the Robinhood investing app. And so this isn't student debt, but we're talking about still a sort of debt. And he really didn't have a firm grasp of how to use it, and ended up, as he saw, with a negative $730,000 balance, and took his life. Because for him, just the fear of being in indentured servitude and spending however knows how much longer, paying back Robinhood, he left in his suicide note, how was a 20-year-old even allowed to be assigned that much leverage with no income? And he asked it perfectly, God rest his soul. But, the saddest part is that that wasn't even a true reading, and that if he had given it another day or two, it would have leveled out and gone away. But the fact that that's enough to scare people into literally saying, I don't want to live on this planet anymore, is what we're trying to combat. And just that comes through educating, but also having real conversations and not just strategically leaving out these things for the sake of, oh, everyone needs to go to college and it's the best 4 years of your life. It can be, but it also can really hurt a person and set them up for failure. So, you know, we pride ourselves on just being willing to go there and be vulnerable, share our personal stories, and have the right conversations in the right rooms to affect change.
Oh, thank you for that. Sim, can you walk us through the student loan consulting process? Is there a cost? How long does it take? What documents do we need to have? How does this work?
Yeah, so we have an intake form that we have everyone fill out when they sign up for us and with us, and we ask for some information like how much debt do you have, what's your family size, income, and we have everyone send us what's called a student loan data file, which you can find on studentaid.gov, that website we all love and hate. And there's a section where you can download my data, and then we've created basically a spreadsheet where we can like run it through because it's a really ugly file. It's like it's a clunky .txt file that's really hard to read. So we've created, you know, an Excel sheet with some macros. We can pull out information. And when we meet with folks, what we're trying to answer the question one is, what do I do with my loans, right? There's two options, payoff or forgiveness. So we're going to figure out which of the two paths you're going to do. We're going to look at your income last year. I want your AGI. We're going to do a kind of an income projection moving forward, which sometimes is a guess. You know, some people are in industries where income is variable. So we can run like different scenarios too. What if my income is this or that? We'll talk about your spouse. Does your spouse have student loans? What's your spouse's income? What state do you live in, right? 9 states are community property states. And so the question is, how do I file my taxes? Well, the way you file taxes in a community property state's a little bit different than like the common law states. And that's a question we answer a lot too, is tax filing. What repayment plan should you be on? If you're going for PSLF, which of the 4 income-driven plans should you be on? And if you're going for long-term forgiveness on income-driven repayment, like, you know, the 20 or 25-year plans, if you want to start saving for that tax bomb, assuming that there will be one, what do you need to invest every month? So that way you can actually have enough to pay this thing.
Okay.
I'm sorry, I didn't answer the rest of that question. You asked, our pricing is $595 unless you have an affiliate link. We'll give a $100 discount, $495. You get all copies of the spreadsheets, and then that includes 1 year of email support.
Okay, and you're advising on both types, public and private loans.
That's true. For private though, there usually aren't too many options other than refinance and chase a better rate.
Okay.
So
Fair.
usually if someone like only has private loans and they've like noted that ahead of time, I'll kind of save them the fee because I don't think that's right. So if I can't help you, I'll just kind of tell you, hey, check out this place to refinance, and that's it. But a lot of people tend to have both types.
Okay, so what about parents? We're an intergenerational chapter, so we have folks here within our chapter and also the community that span all age groups. So some folks also have loans that they've taken out for their children, those Parent Plus loans. How do those factor into this type of, let's say, the forgiveness, the PSLF or the IDR or any of those?
Yeah, Parent Plus loans, I don't know what it is, but the government does not like parent borrowers for some reason. So options are limited, but they're federal loans. So there's not nothing. So the deal with Parent Plus loans is by themselves, there's only so many plans you're eligible for. We were talking about income-driven repayment. The only way you can get them on income-driven repayment is by turning them into like an actual direct loan. So what's someone to do? They would think, well, let me just consolidate them. Well, if you do that, then what you have is and this is very confusing, you have a consolidation loan that paid off a Parent Plus loan. So it is only eligible for one of the 4 income-driven plans, and it's the worst one of the 4 usually. So we have another process. It's a loophole and it's legal. They found out about it. They're getting rid of it in 2025, but it's called double consolidation, where we kind of do 2 sets of consolidations at the same time, 1 round, and then we'll do another consolidation, 2nd round. And what we've done is we've eliminated the Parent Plus loan code. Now you can go on an income-driven plan. So back to mom and dad, one of them borrowed for your education. Well, assuming that you're like almost retired or you're retired, if you go on an income-driven plan, unless you like did a really good job of saving or you have the ability to save a lot in your 401k, you're probably not bringing in too much with Social Security. So you're going to get a very low payment. For some parent borrowers, it's even a $0 payment. And this is not pleasant to think about, but they're federal loans. They die with the borrower. And so, you know, maybe you don't plan for the tax bomb. Maybe the loans will go away, you don't have to worry about it, or you do plan for the tax bomb depending on how old your parents are. The typical arrangement that I see is that, when I meet with a parent borrower, usually their child is on the call. They're grateful that the parent borrowed for their education. So they're like, well, I'll handle whatever the payment is, like, I'll handle it, or I'll handle saving for their tax bomb account. But some parents are like, I don't want that to be a burden for my kid. Like, I'll take care of it. But usually with the Parent Plus loans, like, if you want those better repayment options, you have to do the double consolidation. So we have that available until I think it's July 2025.
Okay. Ladies, it looks like we've kind of gone over our pre-prepared questions a bit. So I have a couple other questions that we're gonna try to hit on right now. Okay, this one is for Sim again. To account for the potential error in the government on the government side, is it recommended to pay more per month if your personal budget allows, to minimize the risk of miscalculation or potential lack of public service / teaching student loan forgiveness in the end?
I think to an extent that's kind of like a risk tolerance question, like how much risk are you able to withstand? A lot of people have incorrect payments right now, so now's a good time to take the risk and not make that payment. We have something called on-ramp right now. So payments have been turned off for 3.5 years. And by the way, those 3.5 years do count as payments towards PSLF, right? But payments have been turned off for 3.5 years, and a lot of borrowers are going to struggle to make payments, right? For one reason or another, things haven't necessarily improved for them. So let's lost my train of thought. So payments have been turned off for a while. And so now you have these servicers, all of them underfunded and understaffed. So we're seeing a lot of mistakes, when loans are transferred from one servicer to another. So we have on-ramp. With on-ramp, what they're going to do is, for the next 12 months, if someone misses a payment for whatever reason, they're going to retroactively place you into forbearance. And so that will prevent the loan from being like in a default status. Some of the servicers, Mohela, they're putting people into what's called administrative forbearance without them requesting it. And that's just to give Mohela time to fix it. For PSLF folks, take that administrative forbearance because they already said it's going to count towards PSLF. And so that's a $0 payment for free. Take it. Don't make an extra payment. If you're going for income driven repayment, I probably still wouldn't make that payment. Some people have, because one of the mistakes we're seeing is that people's payments are being defaulted to the standard 10. So that could be a $3,000 or $4,000 monthly payment for some people. I wouldn't make that payment. That's crazy. I would rather just take the risk and then go through the complaint process. And I don't say that like to say that that's easy, right? There's a time constraint. There's an emotional burden when you have to go through that process. So I don't want to like diminish that for anyone. But I also wouldn't want you to have to feel the constraint of paying a $3,000 or $4,000 payment because they made a mistake. I'd rather you keep that money for yourself so you can live off of it and not get into any kind of financial ruin, and then let them fix their mistake.
Okay, going in this same save, since we're talking about that right now, we have another question kind of pertaining to save. The ASCII is everybody just went back into repayment, so they've just made their first payment. And they've also applied for the SAVE program. Overall, though, they just want to be done with this in 10 years or less. They got saved, they were approved, but they can afford the original amount that they were supposed to pay, I guess. Would it be beneficial for them to pay the original monthly cost if they can afford it, or should they still complete the loan payments in 10 years with the SAVE plan? I think that SAVE would, if that's one of the IDRs, so that's either 20 or 25 years before it gets written off, right?
That's true, but there's a strategy with being on SAVE now for some folks. Let's say that you just finished school and you're like, I don't want the student loans to like control my life. Maybe I want to like buy a house next year, and hey, my income's kind of low right now. Well, and I've actually done this for some physicians who next year will be earning a lot, but they just finished residency, so now their income's low and they want to buy a house. So what we said is get on the SAVE plan. You're going to have a very low payment. That loan's not going to grow. You have that interest subsidy. So all that money you're earning right now at work, go ahead and use it for whatever you want. Then in a year or two, when your payments go up, okay, now you can change your strategy and start paying down the loan, but you're going to get that really nice interest subsidy for a couple of years. So almost like temporarily, I'm going to pause my loans, right? So I'm going to make my minimum payments and then go do something else with my money, and then I can revisit this. The nice thing with federal student loans is there's no like prepayment penalty or anything. So if you want to pay them off, you can make extra payments anytime. You're always allowed to pay more than your minimum payment. The other nice thing about having a low minimum payment is like, let's say, yeah, you're paying off over 10 years. Maybe there's a month or two where you like want to do something else. Well, then make your minimum payment and don't pay aggressively for those couple of months. So there's still a benefit to having a low monthly payment sometimes.
Okay. And our next question is, so it was mentioned that being married can possibly have some advantages towards student loan repayment. Can either of you explain that, or what those advantages could be, or how that would help?
So there's this weird thing in the federal system where, let's say you have two borrowers who are married and they both have federal student loans and you're doing income-driven repayment. The way that they're going to calculate your payment in that very specific scenario is they're going to calculate a household student loan payment, and then they prorate it across each spouse. And so sometimes you have a situation where you're going to have a spouse who maybe has like really high debt. They're going to get a very low payment. Or maybe it's the other way around, right? But you can kind of finagle that to see how is the payment going to shake out versus like what percentage of the debt someone has.
Okay. And then for either of you, in regards to the concern about presidential administration changes, impacts based on presidential administration changes, are there any elements of the PSLF program that are grandfathered in or that will protect PSLF participants in perpetuity?
So the language of PSLF is in your promissory note. So what's protected with PSLF is that it exists. That is not something that's true for every borrower. What they could try to do in the future is like take it away, but people who are current borrowers will have PSLF because it's in your promissory note. What is not guaranteed in the promissory note is that it will always be tax-free. So PSLF traditionally has always been tax-free. That was the intention behind the plan. That part is not guaranteed, but if you are on the path to PSLF, it will be there.
Okay, I have downloaded my promissory note just to have it as a part of my documentation process because it does say that specifically in there, and I can always refer back to it. So then a question for either panelist. To piggyback off of the administrative forbearance, I'm using the debt avalanche approach, and the loan with the highest interest rate is in administrative forbearance. Based on what you previously said, are you suggesting I don't pay this loan and instead pay the loan that will be starting? Additionally, are the loans in forbearance accruing interest?
So that's one of the downsides of the forbearance is that if you're not on the SAVE plan and it's that forbearance, they are accruing interest. If you're going for PSLF, we don't care because they'll forgive it tax-free, right? But if you're not going for PSLF, that's where filing that complaint might be helpful because that's something that they put you in that you did not request. Administrative forbearance means they did it, right? There's different types of forbearance, and that's the one that you didn't request.
Okay, I think that we might have reached the end of all of our questions. Yes, we have. Thank you, ladies, for participating in our panel. We really do appreciate your input and your time. This was a great discussion, and we welcome you back anytime. Would you all like to tell us where we can contact you, or where our participants can find your resources to get in contact with you?
Yes, I'm happy to drop mine in the chat. And because I think, so much this conversation was more on like the policy side, Sim, as y'all see, is totally your girl and like has got you covered for these more policy related questions and the bureaucracy, in terms of how legislation is playing a part and what borrowers need to know, at large as they go through the different systems. We've got you covered, just from like the social impact side. So, just through us being an NGO, social enterprise, engaging with our programming for anyone who might be a parent. We've gotten a lot of interest lately from those who are freaked out on behalf of their kids. Like, how do I keep my son or my daughter from, racking up $250,000 in debt and spending the rest of their life trying to work it work it down. So I will put our links in the chat. Prosperity Project, we're spelled a little different. We have an A because we're combining prosperity with parity, as in gender parity and racial parity. And yeah, I'll drop our website and our Instagram, which is where you can find us most frequently.
I'll drop our website as well. We're just studentloanplanner.com. We have some free resources to start with because I know not everyone wants to pay for a consult, and that's totally fair. So on our website, we have all the calculators we use in our meetings are also publicly available. And if you want a resource where there's where we're kind of tracking what's going on and kind of dispelling some misinformation, follow our weekly newsletter. As soon as we get updates, like we push them out. Usually it's our founder, Travis, does most of the weekly newsletters, but I would say that the content is really high quality. We also have a podcast, so we try to talk about different issues with student loans. And then for people who want like more hands-on support, like, no, just tell me like what to do, then you can meet with any of our consultants, myself included.
Again, thank you, ladies, for giving us your time and your knowledge. And Jare, back to you.
Thank you. I love how it's like we're at a news desk. Just hand it over. And we, you know, as soon as we said there were no more questions, we got 2 more questions that slid in. I will answer them, but Sim and Bree, if you want to chime in, you can. So the first question is, can the federal government afford to offer student loans? Does it seem that future students will have the option of federal student loans? And it's not whether or not, so to answer your question, it's not whether or not the federal government can afford to offer student loans, because as you think of it, it's kind of like if you go to a bank, they're going to give you more debt. They'll want to do that because that's a way that they make money. So it's not necessarily can the federal government afford to offer student loans, but is there really a desire? I was at a panel discussion this past weekend, and the Generation Alpha, so those are the people who are in like their tweens right now. And they are also renamed Generation Pandemic because they kind of suffered the brunt of going to school during the pandemic. They're not as interested in going to college. They've gotten used to doing school online. They see how student loan debt is racking up, and they've realized the number of career opportunities that do not require a 4-year degree. Although by and large, it's always the case that people with a 4-year degree out earn those with like a high school degree, but it's still just a lack of interest sometimes. So while the federal government can afford to do it, there definitely needs to be some kind of plan to help stimulate the economy so that people can say, oh, I can go back to buying a house, or I can start a family, or whatever else that this generation, I would say like millennials and Gen Z would do, because they just aren't, out of fear of the loans. And then there was another question. I'm making my first payment soon and just graduated from college in 2022. What advice can you give for recent graduates? 1, make your payments. That's the number 1 advice. Make your payments, but figure out the second option is the second piece of advice, find out what payments work for you. And a way to do that is to obtain a personalized repayment plan. So Sim talked earlier about how student loan planner will help you develop a plan, and there's $100 discount. We placed that link in the chat. It was the one that was used to answer the question. So if you go to studentloanplanner.com/RLMM, you will get the $100 discount to book a consultation. That's for anyone, not just the person who asked the question. We also included the Prosperity Project's website, as Bree mentioned, prosperityproject.org, and Sim, and you can meet other student loan planner advisors on studentloanplanner.com. As we wrap up, I'm going to display one more slide for you all, just so you can get that information. Even if you can't see it in the chat, you'll be able to see it on the screen. Give me just a second. All right. So as we wrap up, I want to thank our panelists again. I know Danielle already did a great job of thanking them. And I also want to thank Danielle, as I make a member who stepped up and advocated and shared information. It's not always easy to be on a screen talking about a topic that is really either passionate for you or something that's very nuanced and detailed, like student loans. So thank you all for joining the panel today. As some parting advice, PSLF, stay consistent, get documentation, follow through. There are advantages for being a parent, or not a lot of advantages, but there are options. I shouldn't say advantages. There are options if you are a parent who has loans, or if you and your partner are both have loans. And make sure you do your due diligence. Don't just take what you see. A lot of these servicers, they are overworked and underpaid and understaffed. So make sure you look at what you have. Go to studentaid.gov to get the most updated and relevant information. And again, all the information you need to stay in contact with our panelists are on the screen. With that, we also encourage you to stay connected to AKA Alpha Kappa Alpha Sorority Incorporated, Xi Omega Chapter. We have our socials and links on the page. Thank you all and have a lovely evening. We're going to send you away with some more music.